Welcome to the Riskwiser Zone. I'm your host, Luis. It's great to have you joining us today as we dive into the latest developments in the world of stocks and finance. As we begin this new episode, let's take a look at the recent performance of the market. The S&P 500 index ended 2024 near an all-time high, despite a December pullback, driven by growth stocks and large-cap shares. This is a testament to the resilience of the market, but also raises questions about what's to come. Now, let's examine some of the key factors that influence this performance. The Fed's interest rate cuts in November and December had mixed reactions from the market, with stocks gaining in November but pulling back in December. International developed market and emerging market stocks underperformed due to concerns over U.S. trade policies and European political instability. Mid-cap equities are appearing attractive due to their relative valuations, profitability potential, and lower vulnerability to higher interest rates compared to small caps. This is an interesting development, as it suggests that investors may be looking for opportunities in the mid-cap sector. We've also seen significant gains from some mega-cap technology companies, leading growth stocks to outperform their value counterparts in the quarter. However, it's essential to remember that past performance is not a guarantee of future results, and investors should always maintain a balanced perspective. As we navigate these complex market dynamics, it's crucial to stay informed and adapt to changing conditions. On the Riskwiser Zone, we're committed to providing you with fair and balanced analysis without bias or sensationalism. So, what can we expect in the coming months? Will the market continue its upward trend, or will we see a correction? These are questions that we'll be exploring in more depth as we move forward. For now, let's take a brief pause. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're glad you're still with us as we dive into the latest news from around the world. Today, we're focusing on a significant development in the space industry, particularly in Europe. We've got an update on the first orbital rocket launched from European soil, which unfortunately crashed just seconds after takeoff. The Spectrum rocket, developed by German startup Isar Aerospace, was launched from the Andøya spaceport in Norway, and was intended to be the first commercial orbital launch from continental Europe. According to reports, the rocket failed to reach orbit and exploded less than a minute after liftoff. However, despite the setback, Isar Aerospace is hailing the test flight as a success, saying it produced extensive data that their team can learn from. The company's CEO, Daniel Metzler, stated that the launch demonstrated their ability to design, build, and launch rockets, laying the foundation for catering to the growing demand for flexible satellite launch services. It's worth noting that this is not an uncommon occurrence in the space industry, where failures are often a stepping stone to success. As Isar Aerospace continues to develop its technology, it's likely we'll see more attempts at launching orbital rockets from European soil. The European space industry has been gaining momentum, with several countries investing heavily in space exploration and commercialization. The success of companies like Isar Aerospace will be crucial in helping Europe become a major player in the global space market. We'll be keeping a close eye on developments in this sector and bringing you updates as more information becomes available. In the meantime, it's clear that the road to space is not always easy, but with perseverance and innovation, we can expect to see significant advancements in the years to come. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We've had a fantastic show so far, discussing various topics that impact your investments and financial well-being. As we wrap up today's episode, I'd like to shift our attention to some important news regarding migration trends in Australia. Recent data suggests that net overseas migration to Australia has fallen by 100,000 in each of the past 2 years and is expected to continue falling at a moderate rate in the next 2 years. However, experts predict that from around 2027, the number of departures will expand considerably, leading to a significant decline in net overseas migration. This shift is largely attributed to the end of temporary work visas for individuals who were unable to return to their home countries due to COVID-related travel bans, as well as the conclusion of working holiday visas for young people from countries like Britain and Ireland. Additionally, there are approximately 92,000 people on protection visas who have not been deported, and almost 350,000 individuals on bridging visas who will need to leave the country in the next 2 to 3 years. It's essential to consider the potential economic implications of this decline in migration. Some experts warn that undue panic could lead to knee-jerk migration cuts, causing migration levels to fluctuate wildly instead of settling back to a more stable normal. Meanwhile, Australia's population growth rate is also expected to slow down due to a substantial downgrade in the nation's fertility rate and projected lifespan. The national fertility rate is forecasted to fall to a record low of 1.44 this financial year, while life expectancy forecasts have been revised downward due to increased deaths associated with COVID. As investors, it's crucial to stay informed about these demographic shifts and their potential impact on the economy. We must consider how changes in migration patterns and population growth rates might affect various industries, such as housing, education, and healthcare. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe. And until next time, invest with caution.